Geoffrey, I believe away from the geopolitics, away from the international relations, there's a modest central bank meeting coming up in the vicinity of 9 days. It has come up suddenly on us. What will you watch for this week as we all try to get to this important Fed meeting?
Well, I think the mood music is quite interesting right now, given the trade issues and if you throw in the Brexit along the mix right now, these major economically impactful geopolitical events are sort of moving in the right direction. So given central banks, and if you look at, there's a good chunk of the Fed which may have been a bit skeptical, about the need to apply extreme easing anyway, then is there going to be a subtle change in tone saying actually things are not that bad, and they're looking for validation of that view, but still probably looks like a cut is still on the cards. Mm-hmm.
Well, the cut's on board of that, but then you have to look out further. I've been focusing on December 11 and obviously Madame Lagarde on December 12 as well. Are we going to see within the dialogue this week and into the Fed meeting dialogue about December? Are we so discreet now we ignore December and just focus on October 30?
I think we need to focus, on the short term at this point, because a lot can happen between month end. I think, that's when the Chinese negotiators want to really hammer out the details on this phase one trade deal. If that falls apart, then the next meeting is going to look a lot different, compared to a meeting with a phase one deal in place, right? And same for the ECB, right? If we still get a hard Brexit, which is not off the table yet, no matter how much of a tail risk it is, if we do get that by the end of the year, then again, the ECB in December is going to actually look a lot different compared to where it is now. So let's just focus on 1 week at a time, one event, one deal at a time.
Okay, but Geoffrey, if you look at Chinese growth, sub 6%, what does that actually mean for the rest of the world?
Oddly enough, the bulk of the feedback on that right now is bullish, in sort of a bad way, because growth is so bad. Surely China must stimulate the economy. Surely we're going to get a big bang stimulus right now. Surely they cannot accept this. So the reflexive action from markets when Chinese growth numbers are bad is always a stimulus is coming along. I think we need to hold fire on that because, China may say, well, if we're still getting the jobs numbers that we need, if we can head into MPC next March, where the economy can just hum along, then they can tolerate this. If you listen to the Ministry of Finance from Beijing, there's no mood to, implement the flood waters, right now, to just go for a big bang stimulus. So I think the market might be a bit surprised to the downside on that. I think Beijing will try to hold the line.